Good afternoon, wonderful mindsetters. You are here today with Tara, and I am in studio with Mahesh today. How are you?
I'm well, Tara, and you?
Good, thank you. I believe the sun's out. It's a good day.
Yeah, finally some sun. And yeah, with sun comes positive vibes.
Exactly, some energy to study. We can do this.
Energy, that's the word I was looking for.
No, it's great and very
Yeah.
important for you guys. I know this is such an important time now going into matric. Important work that we need to cover. What are we covering today before I
Okay.
start?
Today, guys, we're looking at partnerships. So that's going to be our topic, and that's what we're going to be revising on.
Okay, lovely. Before we get started, this is such an important time of your lives, grade 11 and next year, and a lot of you are looking into doing your driver's and learner license if you haven't gotten those. And my suggestion to you, wonderful mindsetters, is this fantastic book, The Safeways K53. I suggest it because it's very beneficial in studying for these tests. But what it can also do for you is enter you into a competition to win a Chevy Spark, which sounds so exciting. This competition has been going on for a while. If you go onto our Facebook page, facebook.com/learnextra, you'll see all the information. It's called Be a Bright Spark, which I know all of you are very capable of doing this. What you do is you purchase the book, or you can download the app. A credit card is not necessary for downloading it from Google Play App Store. You can get a voucher from any Pick and Pay and redeem the purchase from that voucher. You just keep that information, like our pages on our Learn Extra page and the Safeways K53 page, and then you enter the competition. All the links are on the Facebook page for you to do so. And while you're entering the competition, on that tab, be sure to share from that page because it enters you twice again, which is lovely. It increases your chances to win this wonderful little car. So that's it from me. This is proudly brought to you by the MTN Foundation, the MTN SA Foundation, and endorsed by the Department of Basic Education. Thanks, mindsetters. Let's get going.
Okay. Right, guys, we're ready to start our revision on partnerships. So in today's lesson, we're going to be focusing on some ledger accounts. We're also going to be looking at the current account note, and this obviously relates to the balance sheet, as well as the calculation for appropriating profits or losses in terms of a partnership. Okay, so let's get started. Right, our question: you are provided with information relating to JA Traders with partners James and Abram. The business uses a fixed markup of 100% on cost required. Okay, so for the first part of the question, we need to complete the following ledger accounts as at 1st of March 2013, which is obviously the beginning of the financial year, to the 28th of Feb 2014, the end of the financial year. So the accounts we're going to be looking at is the capital account for James, the capital account for Abram, and then the drawings account for James. Right, the next part to the question, we're then going to be looking at the current account note for the balance sheet as at the 28th of Feb 2014. Now remember, guys, whenever drawing up the current account note or even the T account for capital or drawings, it's going to require a bit of calculations. So I suggest you have your calculators in front of you, a pen and some paper so that you guys can work with me. Let's go through the information and we can then get started. Our information gives us the following. The following balances appeared in the general ledger on the 28th of Feb 2014. So we've got a balance for capital for both partners. Then we've got drawings again for both partners. Current account for partner James, there's a credit balance, and a reminder, this is the current account balance at the beginning of the financial year. Current account for Abram, he's got a debit opening balance, again a reminder, 1st of March 2013, and they're also giving us the profit and loss account which is an amount of 580,000. Okay, we then come to our additional information and adjustments, which we will obviously deal with and read through in detail when we're attempting the actual question. So let's now get started with the very first question, which is our ledger accounts. Right, the first ledger account, guys, that we're going to be completing will be the capital account for James. So let's go straight to our information. We've been told in our opening balances, capital for James, there's a balance of 100,000. And then we've got some additional information, which I need to read out. So James increased his capital contribution by 30,000 Rand. It was obviously cash on the 1st of January 2014. This was properly recorded. Okay, now guys, absolutely important. This bit of information was properly recorded, meaning this amount of 30,000 has already been included in my opening balance. But remember, they want me to draft a ledger account for the 1st of March, beginning of the year, until the 28th of Feb, which is the end of the year. So I need to show my capital balance at the beginning of the year, what happened during the year, and then my capital balance at the end of the year. So let's get started. All right, let's go back to our, there we go. Right, so my capital at the beginning of the year, which is the 1st of March, would have an opening balance of, okay, gonna just draw a timeline. So I've been already told my balance at the end of the year is 100,000. According to the information, James contributed additional capital on the 1st of January 2014 of 30,000. So let's take that through to our timeline. So during the year, remember, this is obviously at the end of the year, 28th of Feb. So during the year, which was on the 1st of Jan, he contributed an additional 30,000. So let's now look at what was his capital contribution at the beginning of the year. In other words, before he contributed the additional 30,000. Absolutely correct, mindsetters. I'm going to obviously subtract. So the 100,000 minus this 30,000 to give me an opening balance for his capital contributed on the 1st of March, an amount of 70,000. Okay, so let's take that information through to our ledger account. So my balance at the beginning of the financial year is 70,000. Right, recorded my opening balance. Now let's look at what happened during the year. During the year, he contributed an additional 30,000. So let's include that on the 1st of January. And guys, you obviously know you need to fill in the year as well. Contra account would be bank. Okay, if I had to fill in a folio reference or a journal reference, this would go into my CRJ, and the additional capital that he contributed an amount of 30,000. Right, if we now have to balance this account at the end of the financial year, his capital contribution is now 100,000. So let's record that, the 70,000 plus the 30,000. So at the end of the year, his balance is 100,000. Okay, mindsetters, easy stuff, not difficult, but just remember, in this case, you're obviously working backwards. Right, let's move on now to the next capital account. Okay, my capital account for Abram. Let's go back to our information. Okay, so we're going to start off again with the general ledger and the balance given to us in this table. So the capital balance for Abram is an amount of 150,000. And then I've got some additional information. Remember, guys, the additional information there is there to tell you, to help you establish whether the balance given to you is, in fact, at the beginning of the year or at the end of the year. So let's go to the additional information and let's find out what happened to capital in terms of Abram's contribution. on the 1st of February 2014, Abram decreased his capital by 50,000. So he decided he probably contributed too much, and now he wants to decrease his capital contribution by an amount of 50,000. This was not recorded. Okay, very, very different from James's transaction. This was not recorded. So if we go back to our information, 150,000, obviously that decrease was not recorded, which means this balance represents my balance at the beginning of the year. Okay, so let's take that information through to our answer sheet. Right, so at the beginning of the year, on the 1st of March, balance brought down 150,000. Okay, according to my transaction, Abram decided to decrease his capital contribution. So a decrease would be shown on the debit side. He decreased his capital by 50,000. Your contra account would be bank. And your journal or your folio reference in this case would be the CPJ. The date of this decrease took place on the 1st of Feb 2014. Right, if we now balance this account, guys, okay, the capital balance for Abram is now 100,000, and this becomes our balance at the end of the year. Right, guys, I'm not filling in dates because as grade 11 students, you obviously know how to complete ledger accounts. And remember, I want to try and focus more on the calculations, especially since this is a revision program. Tara, how are we doing? Are there any questions so far?
We're doing fine. No questions so far, but please feel free to ask. We're here to help.
Yeah, no, definitely. Right, so let's just quickly complete this account. So at the end of the year, or the beginning of the next financial year, which will be 2015, his capital contribution becomes, balance brought down, an amount of 100,000. Okay, guys, with me. Right, let's move on now to our next ledger account. Okay, the next ledger account that we're looking at is the drawings account for James. So again, let's go back to our information. And there we go. So according to the information, or according to our general ledger on the 28th of Feb 2014, the drawings for James, what he's taken out of the business, guys, an amount of 80,000. So let's bring down that balance first, and then we're going to look at our additional information. So on the debit side, on the 28th of Feb, his balance brought down an amount of 80,000. Let's just quickly double check that. Yeah, it is 80,000, correct. Right, let's now go to our additional information. Okay, it should be additional information 2. There we go. James had taken stock with a selling price of 1,000 Rand on the 28th of Feb 2014. The accountant forgot to enter this transaction. Right, so the owner, guys, remember, when the owner takes stock out of the business, we record this not at selling price, but instead at cost price. So a little bit of a trick in the actual question itself. They're giving you the selling price, not the cost price. The selling price is given to me at 1,000 Rand. And in order for me to calculate the cost price, I need a markup. Okay, so if I go further up to the actual question, okay, let's find the actual question itself, because that's where we've got the markup. I'm sure it was 100%. There we go. There's that markup that I'm looking for. The business uses a fixed markup of 100% on cost. So let's take that through to our actual calculation. Okay, it should be... Okay, it was under the information. Just find that quickly. Oh, there we go. Right, so I'm given my selling price, which is 1,000 Rand. The markup is 100% on cost. So if I want to calculate the cost price, I'm going to multiply by 100 divided by 100 plus markup. In other words, 100 plus 100, divide that by 200. This would obviously give me my cost price, and in this case, I don't really need a calculator because it's obviously half off the selling price. So my cost price, an amount of 500. Right, let's enter this information into our ledger account. So let's go back to the T account. So the drawings account will be debited with this additional 500. This would be recorded in your general journal, and your contra account would be trading stock. Okay. Right, Tara, I'm not sure whether we should take a quick break because there's one more transaction for drawings and I don't want to rush with that
Okay,
transaction.
sure. Sounds quite important, so we'll take a break. Make sure you stretch yourselves out, grab a glass of water, but be back. We're going to carry on with this question, and we'll see you straight after the break. Welcome back, grade 11 Mindsetters. We're going to pick up exactly where we left off and not waste any time. Just so you know, all the links that you need for this lesson are posted up on our Facebook page. Be sure to follow along. I think it'll be very useful and beneficial. So let's carry on.
Okay. Right, guys, just before the break, we were looking at the drawings account for James. We're now ready to continue with that drawings account. So let's look at the next adjustment that's going to affect his drawings account. James made a cash donation on behalf of the business. So very, very important. A cash donation on behalf of the business of 400 Rand to the local child welfare organization. The accountant debited his drawings account in error, and they want you now to correct the error. Right, now guys, just please remember, often you're going to find, especially when it comes to year-end adjustments, you're going to get these errors that the accountant made. And normally as accounting students, we normally, Tara, this is just a joke in the classroom. Why do these accountants make these errors?
No idea.
Okay, no, absolutely no idea, exactly. Students get frustrated. They just do it
But why?
properly. Why do you have to make an error? Right, so guys, remember the key is understand the error. If you understand the error, you then fix the error. Okay, I think it works similarly in life. If you understand the actual problem, you then solve the problem. It's no use trying to solve the problem if you don't really understand what went wrong.
Couldn't agree
Okay,
more. Good our low lesson here.
Yeah. Okay, right, so let's understand the error, guys. Okay, need a bit of space, so let's work on this side. Right, so you've got the accountant. Let's draw our two accounts that would have been affected with this particular transaction. James made a cash donation. So one account obviously is your bank account. On behalf of the business, immediately, James is not making the donation, but he's making the donation on behalf of the business. So the second account that should have been affected should be the expense account donations. Right, let's now look at what the accountant did. The accountant debited the drawings account in error. So if you look at the two correct accounts that should have got affected, my bank account, obviously, the business's bank account should decrease, so bank should be credited with 400, which means donations should have been debited with 400. But by mistake, instead of debiting donations, what has the accountant done? He hasn't debited donations, but instead, he debited drawings. Okay, now remember guys, as accounting students, we're not allowed to use Tipex. So we can't Tipex the error and fix it. We fix errors by either debiting something or crediting something. Okay, so let's see how we're going to fix this. So drawings has been debited with 400 Rand. So let's go to our T account. So in this total of 80,000, there's an amount of 400 Rand that should not be in this total. It's sitting in this 80,000, guys. So it's sitting in here, and I now need to remove the 400. Again, I can't use the Tipex, so for me to remove the 400, I am going to credit the drawings account. So let's credit James with 400. And remember, the journal reference would be the general journal. The contra account will be the account that I'm now going to debit, which will be donations. Okay, you all with me? Remember, this is happening at the end of the financial year, because this is when it was discovered that an error was made. So one more time, guys, identify the error and then try to fix the error. Okay, right, let's move on. Next bit of information, I don't think there's more information in terms of drawings. Let's just quickly check. So information 2 related to drawings. Information 3 relates to the partnership agreement. So I'm now done with the drawings T account. So let's quickly balance that account so we know we've completed this account. So if I balance my drawings account, my balance carried down. Let's just quickly get our calculators out. So on the debit side, we've got 80,000 plus the 500. Just move that. Minus the 400, the error that we were obviously correcting, and the balance now becomes 80,100. So let's write that down, 80,100. Okay, as accounting students, we obviously know we must have our totals on the debit side and on the credit side. Let's bring down our new balance. On the debit side, 80,100 obviously becomes my balance brought down for the next financial year, 1st of March, 2015. Okay, guys. Right, let's now move on. Next bit of information, or the next part of the question, absolutely important because we're now moving on to the actual balance sheet note. Which note are we focusing on? We're focusing on the current account note. Now remember guys, your current account note is simply appropriating your profit. What do we mean by appropriating? It's simply another word for sharing your profit. The net profit has been calculated. We now need to share it amongst James and Abram, our two partners. Right, so let's start with the net profit for the year. This information was given to us, so let's go to our information sheet. Okay, so at the top, the net profit for the year was calculated at 580,000. And I know exactly what you guys are thinking. What about that additional expense that we came across? Which expense am I talking about, guys? Absolutely correct, the donations. Remember in the previous adjustment, we came across an additional business expense that was in error debited to drawings. So I now need to reduce my net profit by 400. Okay, why reducing? Because donations is an expense and my profit obviously needs to decrease. So let's calculate our new net profit. Okay, so 580,000 minus the 400, and that gives us a net profit of 579,600. 579,600. So this is our net profit that we're now going to share amongst our partners. So let's take that figure through. Net profit for the year in my total column, 579,600. I'm just going to quickly double check that. Yeah, that is correct. Okay. Right. How are we going to appropriate this net profit? Remember, each partner will be entitled to a salary. And when we talk about the salary, we're talking about his annual salary or their annual salaries, interest on capital, and then bonus. So let's go back to our information and let's read through the partnership agreement. Okay. Right, the partnership agreement stipulates the following. James to receive an annual salary of 120,000. Abram will receive a monthly salary of 9,000. So that's the first way in which we're going to appropriate. We're going to give them what they are entitled to. They're entitled to an annual salary. Remember, guys, the key is annual salary. So let's start with James. He's entitled to 120,000. So let's take that through. So James, 120,000. No calculation required. Let's look at our second partner, Abram. He's entitled to a monthly salary of 9,000. Now remember, guys, monthly salary, don't forget to first multiply by 12 in order for us to get our yearly salary. Right, now guys, please, normally I wouldn't use a calculator for this, but it's that time of the year. Okay, so there we go. And the monthly or the annual salary, 108,000. Okay, so let's take that through. 108,000. Right, not difficult, guys. The total salary that both partners were entitled to, so if we add, we've got 108,000 plus the 120,000, and that gives us 228,000. Right, so we've given them their salary. Now let's move on to the next bit of calculation, interest on capital. Okay, back to our information. Okay, interest on capital is calculated at 10% per annum. Now remember, guys, interest on capital. If we go back to the information that we dealt with when drawing up the ledger accounts, the capital account for James, the capital account for Abram, we already know that the capital balance did not remain constant. So immediately there's a bit of calculation for us to complete. So let's do that bit. I think I've drawn up a table to help us with that calculation. So let's just scroll down. There we go. Interest on capital calculations. Let's start with James. Right, I'm going to quickly reconstruct the timeline that I drew previously. 1st of March, 28th of Feb. Beginning of the year, end of the year. Let's start off with beginning of the year. So I just want to quickly go back to the capital account. There we go. So at the beginning of the year, James had a capital balance of 70,000. At the end of the year, he's got a capital balance of 100,000. So let's take that through on the next page. Okay, so we have those figures in front of us. So beginning of the year, 70,000. End of the year, an amount of 100,000. And if we go back to our additional information, it was the first bit of information at the top. Okay, James increased his capital on the 1st of Jan by 30,000. So let's take that through as well. So on the 1st of Jan, that's when he increased his capital by an amount of 30,000. Right, guys, so the actual calculation, let's just quickly change the color of our pens. For the first 10 months from the 1st of March until the 1st of January, Tara, you can just double check that for me.
Yeah, that sounds right.
It should be 10 months.
Yes, yeah.
So for the first 10 months, he's going to receive interest on 70,000. You guys with me? Right, so let's write that down. So 70,000 times the rate is 10%, and this is obviously for the first 10 months. Right, from the 1st of January, remember he increased his capital by 30,000. So he will now receive interest on his increased capital contribution of 100,000. The 70,000 plus the 30,000 to give us 100,000, which gives us for the next 2 months, he's going to receive interest on 100,000. So let's write that down as well. So 100,000 times your rate, which was given to us at 10%, and he's receiving interest for 2 months. Okay. Right, once I've got that down, now it becomes easy, so let's grab our calculator. Okay, let's just move that a bit. So I've got 70,000 times 10% times 10 divided by 12. I'm going to end up with a decimal, which is fine, and that gives me 5,833. So let's write that down, 5,833. Right, let's look at the second part of the calculation. Okay, I'm going to move that here, guys, so you can see. So we've got 100,000 times 10% times 2 divided by 12, and that gives us, again, a decimal. I'm going to round up this time, 1667. So in total, we can now work out, in total, James will receive an interest of, so let's add the 5833. Okay, and that gives us, should be 7,500. Again, guys, because I've obviously just rounded up. Okay, right, so let's take that through. The 7,500 will be the interest on capital for James. Okay, I'm sure you guys got this. It's not difficult. We've been doing it throughout the year. It's just simply revising what you have learned already. Right, guys, let's now move on to Abram, still with the interest on capital. Okay, so again, I've got another calculation here. Interest on capital for Abram. To help us with the calculation, another timeline. So 1st of March, 28th of Feb. Let's quickly check his ledger account for capital. So Abram, at the beginning of the year, okay, there we go. On the 1st of March, his capital opening balance was 150,000. At the end of the year, his capital balance is 100,000, and on the 1st of Feb, he decreased his capital by 50,000. So all of this information, we're simply transferring it to our timeline. Okay, so beginning of the year, let's just rewrite that quickly. It's 150,000. Okay, during the year, which was the 1st of Feb, he obviously decreased his capital by 50,000 to give us, at the end of the year, his capital contributed 100,000. Right, again, guys, for the first 11 months because 1st of March until the 1st of February. So for the first 11 months, he will receive interest on the 150,000. So let's write that down. 150,000, that's my amount, times my rate was given to me at 10%, and this will be for 11 months. Okay. What happens on the 1st of Feb? His capital decreased by 50,000, so his new capital contribution is now 100,000, and that's what he's going to now receive interest on. So 100,000 times 10%, but this time for 1 month, 1/12. Okay, so again, let's get our calculator out. So let's do the first part of the calculation, 150,000 times 10% times 11 divided by 12, and that gives us 13,750. And then the second part to the calculation, so when his capital decreased to 100,000 times 10%, okay, and I'm going to simply divide it by 12, and that gives us 833. Okay, remember we're looking at his yearly interest, so I need to add up my two amounts. Again, let's just get the calculator out. We've got 13,750 plus 833 to give us 14,583. So 14,583, and that will be the interest on capital for partner Abram. So let's write that down. Interest on capital, get that out again. It's 14,853. Oh, swap them around. Let's fix that. Okay, I just need to fix that, guys. Tara, you need to help me here. 14,583.
Yes.
Get the pen out. Oh. Is it close to Friday?
Yeah, too close. So 14.5.
583. Okay. Right, guys, before we take another break, let's just quickly add up these two amounts. Our total interest and capital for both partners is an amount of 22,083. So 22,083. Tara, I think it's time for another break.
Wonderful. Let's take a break and we'll pick up right where we left off. We'll see you straight afterwards, Mindsetters. Welcome back, Mindsetters. We're going to pick up right where we left off, but before we do, please feel free to ask if you have any questions, and be sure to take the notes, which you can find on our site, to follow along with the lesson. Thank you, Mahesh. Let's carry on.
Okay, thanks, Tara. Right, guys, let's continue with this current account note. So we've given the partners their salary, we've given them their interest and capital. Now let's look at bonus. So if we go to our additional information, let's see who was entitled to receiving a bonus. So Abram was entitled to an annual bonus of 6,000. So there's nothing for James, but Abram will receive an annual bonus of 6,000. So let's enter that. Nothing to calculate, guys. So James, no bonus for you. Abram is going to get a bonus of 6,000, and our total bonus, in this case, an amount of 6,000. Right, now guys, we're coming now to a very important part of the calculation, and I often find, for some reason, the grade 11s tend to make errors with this particular calculation. We're now looking at primary distribution of profit, and thereafter final distribution of profit. Let's start off with primary distribution. Primary distribution is made up of your salary plus your interest on capital plus bonus. Okay, I'm going to say that one more time. Primary distribution is equal to salary plus interest on capital plus your bonus. So let's start off with James, and let's look at what's his primary distribution. So his salary is 120,000. His interest on capital was calculated at 7,500, no bonus, so his primary distribution is 127,500. So let's write that down, 127,500. Okay, let's move on to the next partner, Abram. Let's calculate his primary distribution. So his salary was 108,000, okay, plus his interest on capital, 14,583, plus his annual bonus of 6,000, and that gives us an amount of, I'm sure I've made a mistake there, yeah, I did. Let's just do that again. So 108,123 plus the 14,583 plus 6,000. Okay, that looks better. So 128,583. 128,583. Right, at this stage, we are able to calculate in total what was the primary distribution. So let's fill that in. I've got Abram already, so let's add James. So 127,500, and that gives us a figure of 256,083. 256,083. Okay, right, guys. Now let's look at our final distribution of profit. Now the word final distribution is simply asking you is there any profit left over? In other words, is there a remaining profit? Right, now remember, at the top, we've already recorded our net profit. There's our net profit, an amount of 579,600, 579,600. How much have we given our partners? We've given them 256,083. So is there profit remaining? Okay, there is, isn't there? So let's calculate how much of profit is remaining. So I'm going to start with my net profit, 579,600. Oh, what am I doing? I think Friday should be a day earlier.
It's creeping up on us.
579,600 minus 256,083. And that gives us our remaining profit of 323,517. Just check that.
323?
32. Yeah. 323,517. Thanks, Tara.
Pleasure.
Right. So we've now calculated our remaining profit. What are we now going to do to the remaining profit? Okay, guys, what are we going to do with the remaining profit? Tara, do you want to? There's two partners. So if there's profit left over, we now need to obviously share
Split it between them.
Split it between them. Now remember, sometimes students feel that they need to distribute this equally or share it equally. It depends on that partnership agreement. So let's go back to our information and let's see how we're going to share remaining profits. So the rest of the information, all profit and losses, they're talking about remaining profit, guys, is to be shared according to the partner's capital contribution at year end. Okay, so if we go back to their ledger accounts, let's do that, and let's look at their capital balances at the end of the year. So James had a balance of 100,000. Okay, and Abram's capital balance also 100,000. So in terms of the ratio, okay, 100,000 is to 100,000. We're obviously going to share this equally, isn't it? So each partner will receive an equal share of the remaining profits. So let's go back to our answer sheet and let's do that. Let's share this remaining profit of 323,517. Okay, so let's get the calculator out. So we're simply going to divide it by 2, and each partner will get 161,758. Okay, so 161,758, and there is a comma 5. Just going to include that just for calculation purposes. Okay, it is correct. 161,758, comma 5. Okay, right, let's now move on. Like I said, Tara, this is the calculation, or this is the part of the calculation. For some reason, the kids get a bit confused. They don't understand the difference between the primary distribution and the final distribution.
Okay.
Okay, hopefully you guys, it's now clear. Yeah. Right, let's now move on, guys. So my primary distribution is calculated, my final distribution is calculated, and I can now look at net profit for the year. So in total, how much did James receive from the net profit? For this calculation, all we're doing, guys, is taking your primary distribution, and we're going to add our final distribution to calculate James' share of the profit. So let's do that. Okay, so I've got his final distribution. I'm simply adding the primary distribution of 127,500 and his share of the profit. I really don't like this decimal, but we're just gonna, we just can't pretend it's not there. So 289, let's just get back there, 289,258,5. Right, let's do the calculation for Abram. So starting with his primary distribution of 128,583 plus his final distribution of 161,758.5. Okay, missing a figure here, 758.5. 0.5, and that gives us 290. So 290,341,5. Right, now remember guys, how do we check our figures? James, this is what James has received. So I'm just going to quickly circle this. Okay, this is obviously what Abram has received. If I add these two figures, I must get my net profit. So let's do that, and let's just hold thumbs that it does balance.
Yeah.
Okay, so plus the 289,258.5. Okay, and there we go. It did balance.
Oh,
Okay,
wonderful.
So 579,600. That's how we double check. Right, guys, the rest of the note is quite straightforward. So we've obviously worked out the net profit for the year for each partners. Now let's look at drawings for the year. Drawings, what they've taken out of the business already. Remember, this is what they were entitled to. We're now looking at what they've already taken from the business. So let's start with James first. Drawings for James, we did have a T account that we completed, and he'd taken from the business a total of 80,100. So let's take that through to our note, 80,100. Remember, drawings must be in brackets, guys. Right, let's look at Abram. Again, I'm going to start with my brackets, and let's go to the information. For Abram, from our general ledger balances, there we go. Abram, his drawings for the year was an amount of 90,000, and remember, we didn't come across any adjustments, so his balance stays as 90,000. So if I take that through, in brackets, an amount of 90,000, and the total drawings for the year, okay, if we simply add up, so 80,100 plus the 90,000. So in total, partners have taken 170,100. Okay, right, the last three lines, guys. We're now looking at, okay, this is what James was entitled to. This is what he's already taken. So let's now look at the difference that is still owed to James. So we've got 289. That's the net profit that he's entitled, or his share of the net profit, 0.5 minus the drawings taken, 80,100. Okay, and that will give us 201. Let's write it down, 209. Okay, 15. And at this stage, guys, I'm going to round up. So 209,159. Right, to this balance, we're now going to look at his balance at the beginning of the year. So back to my information, and the current account for James, he had an opening balance, a credit opening balance of 10,000. So let's add on his opening balance. Okay, credit, so it must not be in brackets, of 10,000. To give us his capital, or his current account, sorry, not capital, current account balance at the end of the year. I'm simply now adding these two figures, but at this stage, I'm sure you guys know exactly what I'm doing. So plus the 10,000, and his current account balance at the end of the year is an amount of 219,159. Okay, right, guys, we're obviously doing the same for Abram. So we're looking at the difference between his net profit and his drawings for the year, which obviously you guys will then fill in. Look at his opening balance. Abram had a debit opening balance, so that must be in brackets, and we're able to calculate his current account balance at the end of the year. And the totals, guys, you know what, you're accounting students, so you know how to get the total. Okay, Tara, I think that's it from me.
Right,
Okay.
thank you very much. I had a wonderful time with you guys and with Mahesh today in studio. It was lovely. I learn a lot each time with this kind of stuff. It's very interesting. I wish you the best for what you have left with your exams. I think you guys will do very well. I feel that you will. Please be sure to enter the competition. You can find all the information on our Facebook page, facebook.com/learnextra. Thank you very much from my side. All the all of the information is on our Facebook page, and we'll see you next time. Goodbye, grade 11s. Thank you.